Hi, Mike McCarthy, the Insurance Advisor. We're talking life insurance and the importance of policy ownership. Let's say you have a life insurance policy and you want that money to go to your partner to help bring up the kids, pay the mortgage, rent and other living costs, which need to be found if your income died with you. Now, most people have their life insurance policy in joint ownership with their partner. Now, this means that should you die, the claim gets claimed and paid directly to the partner, the surviving policy owner. Makes complete sense, yeah? But what if your partner was the sole policy owner of your policy? Now, this would mean the money goes direct to your partner. However, you're asking for problems should your partner die before you or you separate. Another way is for you to own the policy just yourself, which is what I see often. In this case, when you die, your life insurance money goes directly to your estate and the money is distributed in accordance to your will, if you have one. This means that there could be delays with the courts, and this is where things can go wrong. Now, let me just talk wills for a moment. A will is a document that can provide instructions on what you want done with your estate after you die. Your estate can include the assets you own, like property, cars, investments, and debts. Also, it would include your life insurance policy that is owned solely in your own name. So understand, if there is no living policy owners or named beneficiaries on your life insurance policy, then that life insurance policy will become part of your estate if you die. Also, when an estate is managed, some assets, like a life insurance payout, may go to paying others who you owe money to first. For example, if you're self-employed, you may die owing money to the tax department, the IRD, who would be first in line before your family. Let's not forget that your will could also be contested. So it's really important to understand that if your life insurance policy goes to your estate, then it will take time for your loved ones to potentially get less after your estate is settled. Also, you have to keep your will up to date. Let's say you don't have a will. This means that you die intestate, meaning that your estate gets administered by someone else, often the public trust, who will disperse your estate according to New Zealand law. This means that your intentions of who gets your life insurance policy may not be fulfilled. In summary, often the best option is to keep your life insurance out of your estate, unless there are specific reasons for doing so. These could be meeting debt liabilities or making provisions for certain people outside your immediate family. Right, let's talk about nominated beneficiaries. Another situation is that you may want part of your life insurance to go to someone else. Now, this is really common in blended families. So to bypass your estate, you can nominate a beneficiary. Now, only some insurance companies offer this. So how do you nominate a beneficiary? Well, the owners of the policy simply agree to an amount that a nominated beneficiary gets paid on the actual policy. This is a contractual agreement between the policy owners and the insurance company. When you die, the insurance company pays the beneficiaries you've named. No dramas, no questions, no waiting. Your intentions on who gets your life insurance are fulfilled, providing the nominated beneficiaries are over age 16. If your nominated beneficiary is under age 16 when you die, then the money will most likely get paid to the guardian, the child's guardian. That being the case, you could leave instruction in your will to set up a testamentary trust for that child. However, that is a whole other conversation that you should be having with an estate planner or your financial advisor. So, the main difference, this is just to summarize, the main difference between a policy owner and a nominated beneficiary is that a policy owner will have to sign the policy document and be involved as a signatory if there are any changes to the policy. A nominated beneficiary is just on your policy and they don't need to sign anything. A parting thought. Having a life insurance policy is indeed the responsible thing to have for your family, but if your policy ownership is not set up correctly, you could unintentionally make it hard work for those you leave behind. Either way, get some advice. If you already have life insurance, it's probably a good time to check who owns your policy. Anyway, I hope you got some great information and value from this video. If you want to be kept up to date with more insurance tips like this, feel free to just like or subscribe to my YouTube channel. Anyway, look forward to talking with you soon. Feel free to get in touch. Bye for now.